I come to you or your brother comes to you, what are you telling him? I got this money. I need to do better because I'm 45 or I'm 55 and retirement is around the corner. And holy shit, you just opened up my eyes. What do I do, Chris?
The question is, does the vehicle match the goal? For example, like if I want to get to France, I'm not going to drive a car because my car will only skip across the water before it sinks, right? So you need to have the right vehicle to get you to the right places. Now, a 401k is potentially great if you're looking to retire after the age of 60. And that's assuming the government doesn't change the rules on you in the meantime, which they can do at any moment and you have no say in the matter, right? They really have control of your money in that process. Now, if you're somebody that says, I would like to have the option to retire before I'm 60, well, then why put your money in a place that won't let you touch it till then without giving you a 10% penalty, right? This is going to slap your hand for touching your own money. Don't put your money in places like that if you want to retire sooner. So if somebody has a 401k already, for example, right, at their work, if they're already after the age of 60, there might be strategies we can use with their 401k. We could pull the money away from the 401k and invest it elsewhere, right? You can self-direct it or use it somewhere else and still get the match. That's rare. For most people, though, you put your money in a 401k, you've locked it up in prison. It's just like paying off your house. You pay off your house, you just locked up your money in prison. The only way to get to it is either sell the property or ask permission from the bank, who might just tell you no. That's a risky play. Remember, all the rules you've been taught is for the financial institution, like you just said, right? Remember, everybody wants you to stuff money in those 401ks because those companies make guaranteed fees off of your money. The more you put in, the more they make in fees. Same thing with banks. The more you pay off the house, the less risk they're taking, and the more risk you take for trying to pay down your equity because that money's out of your life. The best thing you do is have the money in your possession. So if that's the case, somebody's like funding a 401k, in many cases, our clients have to realize, I should stop funding the 401k. Where should I put it? You can put it in somewhere as simple as a savings account, right? And make 0.nothing%. Another option we have people do is that we actually teach a strategy called, it's not the traditional grandpa version, but more what I refer to as max ROI, infinite banking. So you've been in the insurance industry, you probably heard infinite banking referenced before, where you use whole life insurance as a tax-free supercharged savings account. But that only works if you get a policy that has minimal fees so you can get maximum returns inside that life insurance policy. Because it's not just about the death benefit. You can actually use this as a tax-free savings account, earning a lot more than 0.nothing% at the bank, and it's protected from lawsuits and creditors. You have that liquidity and you can use the money and invest it however you want. And in fact, if you invest it the right way, you can actually double dip on your investment returns. You can get your money, making money in two places at once. You can make it inside the life insurance while also investing the money by getting a line of credit against it and investing it and making money over here. So you can make money in two places, accelerating your progress to getting financially free.